Hello guys, welcome and welcome back to my channel. In this video, I am going to be sharing with you what you need to know about funding rates in futures trading. And if you fall under any of the categories that I'm going to mention, then you definitely need to watch this video to the end because it is going to profit you a lot and help you make better trades. Yeah. The number one category of persons that this video is meant for are those that are not aware that there are charges when you do futures trading. If you don't know that there are charges and the types of charges that are involved in trading, especially in futures trading, then you need to watch this video to the end because I'm going to be explaining that. The number two category of persons are those who know about these charges. Somehow you have noticed the slash in your profits or the increments that happens in your losses. This is due to funding rate. I'm going to be explaining to us exactly how funding rates work, how you can use funding rates to determine the price direction, when to buy and when to sell. Okay, Honor Jonathan is my name. If you have not seen me before, probably means you are just joining this channel for the first time. Don't forget to subscribe to our channel if you have not. Here I teach you how to make money, especially through cryptocurrencies and other ways you can make money online. All right, so let's go straight into the business of the day. Just to make us understand a little more about funding rates, okay, we have spot contracts, which is you buying at the spot price, and we also have the perpetual contracts. Perpetual contract is you trading with futures, okay. Futures trading deals with perpetual contracts, while the spot trading deals with the spot contracts. Now that you understand the two types of contracts, the price of both the spot contracts and the perpetual contracts would actually have to be the same. The spot price of a particular token might be, let's say, $1. On the perpetual contract, same token might be trading for 1.01 or 1.02, which means on the perpetual contract the price is a bit higher than what we have on the spot contract, and it can also happen that what we have on the perpetual contract is lower than what is on the spot contract. This difference in price occurs through volatility and other factors. Now, funding rates helps to stabilize this price, which means when the price in perpetual contract goes up, there is a way of controlling it back to what the spot contract says, okay. And when it comes down, there is a way of also making it go up to equate to what we have in the spot contracts. And this is the function of funding rates. Now, how does funding rates make this happen? There is a countdown for funding rates. And when you see the funding rates showing negative, it means the price in the perpetual contract is, below the spot contracts. And when you see the funding rates counting positive, okay, it tells that the price in the perpetual contract is above that of the spot contract. Let me quickly show us this on Binance and I will explain further. This is my futures trade. Okay, let's say we want to work with a particular cryptocurrency, and here I have, Jlj.cc. Okay, and at the top of your screen you would see funding rates. Okay, right now you can see minus 0.0072, and it is negative. You can see the time counting down here. All right, it is negative right now, and like I said, let's try to read what is written here. The payment rate exchange between the long and the short positions for the next funding. Okay, if the funding rate is positive, long will pay short, and if it is negative, short will pay long. I'm going to explain this then, but I need you to understand that at some points this would be positive, and at other points or at other times you will see that it is negative. When the funding rate is negative, just like we have here, it means the price in the perpetual contract is lower than that in the spot contracts, okay, which means you should buy. When the funding rate is positive, it means that the perpetual contract is above the spot contract price, and it implies that you should sell. You see that the funding rates help you get price direction in the markets. Another thing funding rate does is that when this price is negative, when the funding rate is negative, and it implies, you should buy, okay, if you insist on selling, maybe due to your analysis or news that you've heard, you decide to sell, you're going to pay a fee, and this fee is what we call the funding rate charges, and it comes in percentage. Now, different exchange has different funding rates charge, which you would have to pay when you go opposite what the funding rate is saying. When the funding rate is negative and you still sell, you are going to be paying those who are buying. because it is believed that whoever is buying when the funding rate is negative is supporting the price to go back up, okay, which is what the funding rate is meant for at that particular point. So if you insist on selling when it is negative, you are going to be, charged some fee, and this fee is going to be distributed to those that are longing, those that are buying. And that is what this is trying to explain. It says if the funding rate is positive, long pays short, which means those who are longing, those who are looking forward for the price to go up, they are going to be paying those who are buying short. While if it is negative, shorts are going to pay long. Okay, try to process this so you don't get it mixed up. So this is why sometimes when you go into trade, you can see $100, $200, but by the time you end the trade, you might not get exactly what you saw at your P&L in your wallet. If you are trading opposite the funding rate, they are going to charge you. Like I said, this charges varies from exchange to exchange, and also it depends on the asset you're trading at a particular point. By estimation, well, I don't have the exact data for all the token right now, but I know it is between 0.1 or 0.3, like that. So these fees are going to be removed from your trading balance, whether you are in profit or you are in loss. As long as you are trading opposite the funding rates, you're going to pay for this fee. And on the other hand, if the funding rate is negative and you buy, it is the direction which the funding rate wants every trader to go. That way, those who are going shorts would have to pay you that is going long. The fees are distributed among the long traders. So if you are longing, you might just see that your P&L will increase at the end of the day, whether you are in loss or whatever, but some fraction or some percentage will just be adding to your wallets. Okay, and remember there is a countdown. Right now we have 7 hours and 24 minutes 50 something seconds. So after this period, it is possible the funding rate countdown would become positive, or it might still remain negative depending on what is happening in the market. So like I said so far, this funding rate would help you get a better trading position and also tell you the direction to go for, right? You should always make your analysis and make sure it follows or favors the funding rates. That way, you're not going to be paying much fee. Many exchanges have different rates. I'm going to make a video, showing us different exchanges and their different funding rates. Okay, with this, you would know which of the exchange is favorable and would help you minimize those kind of charges. So far, I prefer using Binance because it is actually very low for me, but I can't say with much data, right? If this video was helpful, don't forget to give it a thumbs up. Also subscribe to my channel if you've not. Go to the comment section and share with us what you think about all I've said. You can share this video with as many as you would want to help with this information. All right, see you in the next video. Bye.